Hey everyone. I just want to kind of go over some stocks that are interesting. Maybe they break my typical rules. And hopefully this gives you some ideas. I want to start off by just going over the market overall. This S&P 500 just continues to look very strong, which is surprising for this time of year. And the 50-day moving average is well above the 100-day moving average, and both of those above the 200. The only thing that's a little interesting is that, we are up here towards that top of that Keltner channel, and just seems a little high. It doesn't mean that it's going to pull back necessarily, because as you can see, it's just kind of grinded. But typically when you're up above these Keltner channels, there's a chance that you're going to pull back down either to the middle or the bottom and grind back up. As you can see, we pulled back down towards the middle. This is the 20 moving average. Bounce around, pull back to that 20. There's a nice spot here in September where you just basically floated above the top of the Keltner channel and kept going, and then finally got a dip to the 20 moving average and kept going. When you see a stock or a market bounce off that 20 moving average and go up, it's very strong. Some stocks move up and down, or some markets move up and down all the way to the bottom of the Keltner channel. They go all over the place. They go wild. But man, this S&P 500, it's, for the most part, at least since August, down to the middle of the 20 SMA, up, down to the 20 moving average, up, down to the 20 moving average, up. So the question is, when we dip, because we will at some point, is it going to be a 20 moving average and bounce, or is it going to go all the way to the bottom of the Keltner channel and then bounce? What's the situation going to be? And it's really kind of hard to judge. I'll give you an example of a quick stock that's hard to trade, but overall it's a decent stock. But Pega Systems is A-rated. It's got a lot of things going for it, but it's just up and down, up and down. It's a wild stock. It's hard, unlike the S&P 500. So you can see that it climbs above the Keltner channel, and then it dips, and then it had this huge sell-off, and then it kept selling off into April, but then it rallied and gapped up and went crazy, and it went up and down, and then had this huge move up way above the Keltner channels. Then it moved all the way back down, bouncing off these 100-day moving averages, then back up, looking great, and then back down. And so when you have a stock like this, I think what's important is to take profits on it quickly. You buy down in the bottom of the Keltner channel, sell half or 3/4, or whatever it may be in your strategy at the top of the Keltner channel. Then if it keeps running, great. Then when it comes back down, you're not so disappointed. But right now, it's kind of in that lower Keltner channel buy zone. It's not the easiest of stocks to trade. As you can see, it's very wild up and down. But overall, the trend's up and to the right. So this is one to look at. You can put a tight stop at around 53.50 or 53.25, something like that. If it goes up maybe towards that 60-61 area, maybe sell half, something like that. There could be some selling there, but that's a stock that I'm looking at. Then I have one that I really like that's very interesting. I'm gonna probably jump into this. It does break my rules though. It's DraftKings. This is a stock it's C-rated by Schwab Equity Ratings, but it does have a buy on Argus as of August 11th. And I don't know. I think it sounds like DraftKings has been affected by some of these other companies getting into the prediction business, and maybe betting gets affected by that. Usually DraftKings kind of runs up at the beginning of football season. But I don't know, but it sure has taken a big downturn. And basically, I don't know. I think typically I don't buy stocks that are below the 200 moving average right here, this purple line. And you can see that this 50 moving average is crossing over the 100. So these are all indications of a stock that's just getting weak. The only thing is it's so weak and so low in the RSI that it's almost something I want to look at. So sometimes I'll pull back out to like a 10-year or a 3-year chart on the weekly. And I'll do the same patterns, but we're at that weekly 10-year. We're below that Keltner channel and going towards the 200 moving average on the 10-year weekly. So, I mean, I almost feel like it's got to be bottoming out sometime soon. And so it just kind of minimizes the risk in my view. And this is where I'm a little more comfortable buying a stock like that. Not sure if I'm going to do leaps, options, or just the stock or a mix. But I could realistically see having a stop around this 32 because it's starting to just show a little bit of strength in the last few days. And maybe that's the area where it catches the bottom. It could also go all the way down to like 30 or 29. So it's a tough one to judge, but man, it's one that's on my radar that I'm looking at because I just think it could have a lot of upside. I mean, it could easily, from here go from, 34 to, 42 and then keep going up to like 50. So there's a lot of good upside to it if it does kind of recover, but it's just one to keep an eye on. I really like. There's another one. I like these dip buys, these stocks where, I mean, to me, Lowe's, Home Depot, home builders, other stocks and companies that should benefit from rate cutting and from a rate cutting cycle. I don't understand why they've sold off so much. I think they just got overhyped. The rate cuts got baked in and then people just started selling them off. But Lowe's has gone all the way back down to the 200-day moving average. If it can show some recovery and strength here, I will be jumping in because you can have a nice tight stop at like the 235 area and you've got a lot of upside. I mean, it could go up to 260, maybe even 270, and then if it breaks that, I mean, it could keep on going. So I think with a rate cutting cycle fueling people going to Lowe's and buying home improvement stuff and people moving into new homes and painting them and fixing them up and all that, I mean, I just think that this could be a bargain right here. This is just, we're below the 200 moving average. Can we recover above that and kind of build out a base? I have a feeling we might. I'm keeping an eye on that. Could be buying again leaps or some stock on this and, basically holding out and seeing where it goes. Another one that's just in that same realm, that rate cut benefit, is Home Depot. I mean, the Home Depot and Lowe's, they trade almost the same thesis right here at this 200-day moving average. Home Depot is an A-rated stock by Charles Schwab. And so, I mean, it appears to be fundamentally sound, at least according to some of the analysts. It's long by Market Edge. It's a buy by Argus. LSEG has it as outperform. So it's definitely one that's on my list. I actually will admit I recently bought it in the dip buy, and it kept going down and stopped me out, which happens. So I took a small loss on it. This is why I like to buy these dip buys, because you can put some tight stops on. Yeah, you might lose on them. Usually they are winners, but you might lose on them, but it's a small loss. So, it's not a big deal. I found the win rate to be about like 80%. So, yeah, 1 in 5 stocks, they pop my stop loss off, but the wins are great. So I have a few others. Another one, Citibank. This is another one. I have a very, very small position on this right now, just because I want to keep an eye on it. And so basically, I've got a few shares just because I want to want it in my system, so I'm watching it and I've got a call on it. But basically, this is one that I'm looking to pounce on as well. I did have a little bigger position in it previously. I sold it and made a good profit on it, and then now I'm looking to get back in. This is an A-rated stock by Schwab as well. It's also a buy by Argus. It's a financial stock that, according to Tom Lee, financials should lead the way in this rate cutting cycle, along with small caps. And, I think Citigroup has kind of been judged to have a good PE ratio and good fundamentals, and I think it's a good stock. Now it's dipping now. I wonder if it's giving us a liquidity sweep and it's going to bounce. I've got a tight stop on it. Well, a fairly loose stop, to be honest, because I'm just trying to keep an eye on it. If it starts giving me a bottom, starts recovering, shows a little green, I think I'll jump in that and see if we can get it up to above $100 a share before I start taking profits. So I like Citi. I'm in no rush. I think the market's a little high. I'm kind of waiting for the market to dip. I'm sitting on a lot of cash waiting for that to happen. So I've kind of made my money, made my profits, and now I'm just being patient waiting for another dip. It may or may not happen, but I think it is going to happen. Another stock that's interesting, I'm not so sure that this is a great stock for the environment, but again, I got a small position, trying to keep an eye on it. Just want to, I usually, when I have these stocks, I'm trying to pounce on, I'll put a very small position on just so that it's on my screen, I can track it. I put a very loose stop, and right now, AT&T is kind of showing some strength. It's showing a bottom. So this might be a spot where I want to kind of buy, put a tight stop on. It's going to hold it or not. It actually makes a lot of sense if you look at this level, this 25.75, 25.80 level. You've got this big spiking kind of green liquidity sweep looking candle right here that's holding some support, and then now we kind of bottomed there and found, so it looks like somebody's stepping in and buying there, or something's happening. And that from here at 25, it's got a lot of good upside. It could get up to like 28, 30, and then if it got over that, it'd probably keep running. It's an A-rated stock also by Schwab. It's a buy by Argus, so this is an interesting one. It is kind of an up and down mover. You can see it gets to the top of the Keltner channel, goes to the bottom, and then it moves up and down, up and down. But this is one to look at that I like. Going back to now, I want to go back to like these rate cuts. I'm really trying to focus on small caps, financial, Bitcoin, Ethereum, and then rate cuts stocks. So I've got a few. I'm surprised they haven't performed better. Again, I think it might be because the rate cuts were kind of baked in, and then when we got the news, it's a sell the news type of thing, and now they're getting sold off. But I gotta think if we're in a 6 month or 1 year rate cutting cycle, and we're gonna get rates 1% lower or something like that, that these have to get some tailwinds to them. So, we'll see. MHO is one of my favorite. It's A-rated by Schwab. It's a buy by LSAG. It's a market edge long. And it's just, I did buy this dip. It did stop me out recently. And I have never had good luck with MHO over many years. I've had a challenge trading it, but when it runs, it runs. It's a strong stock when it does. So it's right here around that 100-day moving average. It needs to bounce around, show a bottom, have some green, but it's a bargain in my view. I'm still looking at it. Maybe a tight stop might be at 130. A short-term target, it could be all the way at 150. And honestly, if it get past this like 160 area, I think it could kind of run. So this is one that I really like. There's several kind of in that whole area like that I like. Another alternative, a very well rated home builder that is in the dumps is Toll Brothers. And it's also A-rated by Schwab. And I mean, again, it's past the bottom of the Keltner Channel. It's at the 100-day moving average. It's almost like do or die. I mean, are we going to sell off and dump, or are we going to kind of make a bottom and recover? If we do, this really good buy zones. If you want to kind of look at the mortgage industry, is that going to pick up? Is our applications going to pick up? I mean, from what I hear, they already are. Rocket Mortgage is one to look at. I mean, it's been a strong stock all the way back to 2024, up. And then recently, I kind of like sell the news, rate cuts, let's sell off. We're bouncing off this 100 moving average. Do we show a little bottom? Do we show some strength here, some up movement? If so, I mean, this could be a buy. I will say, I usually stick to pretty well-rated companies, A-rated companies that are consensusly recommended by like Morningstar and Market Edge, CFRA, and this is F-rated by Schwab Equity Ratings as of 10/8. So it's not necessarily a recommended stock by Schwab, and it does have a long by Market Edge, but it's basically a hold by Argus, 3 stars by Morningstar, and LSG has a hold too. So it's not like the most fundamentally overwhelmingly great stock, but it sure is interesting. It's a cheap stock at $15. Can maybe buy options on it for not much, but it's one that, hey, if we get some headwinds, if mortgage applications are picking up, then it could be an interesting stock. So I'm going to leave with one other stock, just because I've had a lot of picks, if you go through, that have been really good, like and AMD and so on, and Google was one of them. And Google just ran. It broke out of this kind of like this pattern right here, and then it just took off. It gapped up and ran, and it was hot, and it was just such a hot stock. I had gotten into Google, and then I kind of sold, basically bought it on a dip, sold half, and then it kept running and sold a little more, and eventually I was out of it, and it just kept going and going. I thought, man, I missed out. I sold too early and I sold too much, but that happens because there's stocks that they just take off and run with you. But I've had so many times where I've had stocks where I didn't take profit. IBM comes to mind. I bought IBM, and I mean it was up huge for me. And I never took profit. I thought, I'm going to let it run. I think I bought IBM in kind of like these areas right here in May, and it was going up and down, and it just went up, and I remember it was right up in here, and I thought, normally I'd take about half off the table. I need to sell it. And then I thought, no, I'm just going to let it run. IBM, it's a good company. I'm going to let it run. And it started going down. I could have took some profit. I thought, nah, it's going to bounce right back up. Maybe I'll even buy more. And then it dumped right here. It just absolutely dumped. And then it kept dumping. And I basically had a huge winner where I had like basically broke even, very small win. And I thought, this is why I take these profits on these companies, especially when I'm getting these wins so fast. I'll get them in weeks or a month. I'll get a 10%, 20%, 5% win on a stock in like 3 weeks or 6 weeks, or sometimes even like a week or two, I'll get like a 5 or 10% win. It's so fast that it's like, so what? Take half off the table and let the other half run. I mean, I had a big winner in BTQ. I've held that one for a while, but I mean, I've almost 10x'd it in 2 different accounts, and I just today took half off the table on each of those accounts. And I'll let the other half run. I had another one, Rich Tech Robotics, that kind of did something like that to me. where it almost like 7 or 10x'd, and then I kind of took half off the table. But let the rest run. Put your stop at break even and let's see what happens over the next couple years with it. But I did take profits in hindsight too early on Google, but I always know these stocks, they always come back down. They always pull back down to the bottom of the Keltner channel. They go up and down, and right now Google's been hot. It's been a hot stock. It was up here all the way at 255, and then now here we are back down at the bottom of the Keltner channel, 238, and it's not looking all that strong. I mean, it might kind of dip down a little bit more. I like these levels right here. You've got this gap up. I mean, you always have to be a little cautious. I am. So I have this mark at 224. If the stock goes down there, it's probably going to gap all the way down and fill that gap at 212. That would be a real deep pullback, but stuff like that happens with these stocks. I would load up right there. If this stock filled this gap at 212, which is probably unlikely, but if it did pull back, I mean, it coincides with this breakout level. It coincides with filling this gap. I'd start loading up on Google right there. But even now, right now, if it shows a bottom, I mean, it's probably where it's going to be. Showing the bottom, and it might be one to buy. So a lot of interesting stocks. I have to say, I think the stock market looks like it's ready to take a breather. We've got some stocks that have been just absolute hot stocks that are, kind of cooling off right now, like AppLovin. I mean, AppLovin's another one. It's been so hot, been such a good stock, and as you see it, it's down towards the bottom of the Keltner channel. Is this a buy right now? It's on my list. It's very tempting. I just don't know because, I feel like the stock market's also ready to cool off overall. So it's a little bit of a mystery, but I'm going to rapid fire through some more. Morgan Stanley, a hot stock that's kind of down at the bottom of the Keltner channel. American Express. Now keep in mind, these are all financials, and these are kind of in the area I want to be. So these are very tempting to me. American Express, down at the bottom of the Keltner channel. I mentioned Citi. There's a stock that's been hot. GM, General Motors. Hot, man. It has just sold off over the last couple of weeks. And I mean, it almost looks like it's forming a bottom. Could put a tight stop in here. Question is the market going to follow these and have a big sell-off? If so, it might be better to just kind of wait on your timing. But I'm just going to throw a couple others out there because these are interesting. KWeb, the internet, China internet stocks. This one is kind of at the middle of that Keltner channel. It's a fair buy area. Their market's a little different than ours, but I'm going to kind of transition that by just doing a quick look at Baba. Baba, again, super hot stock right there at this 20 moving average in the middle of the Keltner channel. So if it can bounce, that's probably a pretty strong indicator. And then Baidu's been maybe my biggest winner or one of my biggest winners recently. I mean, I bought it kind of at these super value, and I held it for a long time, and then all of a sudden it just boop, took off. I think up in this area I actually sold half, and then it took off again. I sold another half. So I'm basically only 25% of my initial position in. And then great timing, it started to sell off. Here we are though. Are we going to bounce? Is this going to kind of flag out and bounce off of here? Or are we going to continue to go down to the bottom of the Keltner channel? The way that I've kind of seen these Chinese stocks kind of operate, I think I'll wait for it to kind of dip a little bit more to the bottom of the Keltner channel. So I hope this gives you some great ideas. I mean, I'm going to leave it with, I don't know if I've hit on this stock, but this might be one of the more solid ideas. This will be my final one. This might be another one that I go on today, and it's Meta. Meta to me has been a huge winner. Netflix and Meta are stocks that I have bought and then sold time and time again, and for years and years. And it's like, man, if you can get Meta or Netflix, and for the most part any of the Magnificent Seven type stocks or FANG type stocks, they just act really well. I think probably because they have a lot of institutional buying, and ETF buying and S&P and QQQ buying, but this is kind of doing what I like a stock to do. So it was up at the top of the Keltner channel, and then it went to the bottom, and then it kept going, and then it had this big green candle with this long wick. This is kind of like a liquidity sweep, and it's right off of, you know, kind of this area where it looks like it could have some support. You know, somebody's stepping in to buy it. People are stopping selling it, and it has this nice candle, and then it's been green, green, green. So probably going to grab this and maybe DraftKings today because this looks like it's kind of building its space. It could dip back down and bounce around and go back up, but if the market doesn't sell off, I would have a hard time believing Meta's not going to go back up to this top of this Keltner channel at about the 770, 780 area. So it might be a good spot to buy it right there. And I mean, I can have a pretty tight stop. I probably would put my stop around like 700, something like that. So we're risking about $20 a share, $25 a share. Not a huge risk, and hopefully it can get up to like 770, 775. So maybe making $50-$60 a share. So like 2 for 1 risk reward. Not bad. I think there's a pretty decent likelihood from my experience that it does recover. Also, it's a good enough stock where you could be patient and hold it. If you had to hold it for months or longer, I don't think that's the end of the world. It's a B-rated stock by Schwab. It's a buy by Argus. So this is kind of like my more solid stock that I'm looking at right now. And then the other one, of course, is DraftKings. That's kind of like that. Break the rules, maybe get it wrong, but kind of interesting. A lot of